Let's talk a little bit more about GE. If you're just joining us, the company reported earnings there about 20 minutes ago. Looks like they're right in line with estimates, the continuing operations number of 37. Revenue was a little light. We've got the whole crew here to talk about it with Ashley in London and Doug Flynn and Charles Payne here in New York. The one thing I'll say just before we go, and we'll go Doug weigh in this, I know you haven't had a chance to yet, but the 37 cent a share number, you know, there are two numbers here, 36 being the net number, 37 cents a share actually factors out a one-time penny's effect on that with preferred shares, which looks to involve the Warren Buffett investment. Berkshire Hathaway received preferred shares with a 10% dividend yield. You factor that out this one time around there, and then you get the 37 cents, which would be right in line. So now that we have that straight, the revenue was a little bit light. The future comments from Jeff Immelt are not positive. What do you make of what a huge company like General Electric this morning, Doug?
Yeah, a couple of things. One is the dividend yield on it now is just under 10% on the straightforward common stock.
Yeah, isn't that amazing?
Yeah, and it's down over 50%, where much more than the general market. So if you look at that as a bellwether with about the same level of risk as the market, to be down that much, to have a dividend that high, if you're reinvesting, that's probably a good thing if you own the shares and you're reinvesting.
Right.
If not, I don't know. I think that I would argue whether or not they should cut the dividend at almost 10%. How can you maintain that at these stock
What do you think,
prices?
Charles?
Well, you know, and plus, right now, if you're the average person watching this show, you could buy this common and actually get a better deal than Warren Buffett.
Yeah,
You'll
right.
buy the stock cheaper and have a higher yield than he has. So.
Yeah, just about the same yield, right, that he got.
Be a pretty good deal. I just think, you know, listen, every one of these, we saw this play out so much last year in the banking sector, where these banks just were so resistant to make the tough decisions. I think Citigroup is the best example of it, but we saw it across the board. These acquisitions that were made last year that were knuckleheaded, that were ill-timed and expensive. I don't understand these larger companies that just fight tooth and nail to keep it going in this sort of environment. No one's going to say, listen, it was a bad thing when the world was melting that you guys had to make some adjustments in your business model, or you had to cut back on certain expenses.
Well, it seems like investors having a certain reaction to that as well, because GE shares were up about 2% after the results, and now they've dropped off into negative territory.
They're going back and forth. They
have. So as far as setting a tone for the market in the day ahead, is GE even doing that?
The one thing I will say is I think that if there was a whisper number, I would think that people probably thought the bottom line was going to be a little worse. The top line did miss. There's no doubt about that. Yeah. But I can't see the stock moving a needle either way because it doesn't seem like the CEO, Jeff Immelt, is going to come out and say anything that we can grab a hold of or even infer things. You know, saying that we're running the company to maintain a AAA rating.
You better be.
Isn't quite, yeah, exactly. Isn't quite what
Don't you think people give GE a pass just because they're GE and they'll give them an extra amount?
I don't know if they do anymore. You think so still?
I still think there's that people want to hang on to a stock. Like they still think GM can't go out of business. They want to hang on to these companies that have been around for 100 and some odd years, and as we saw with.
But people are definitely more critical of them than they used to be. Definitely. There's no doubt about it, and you know, a lot of that cachet was lost in the succession. You know, although they rolled the red carpet out for the new CEO Jeff Immelt, who's not so new anymore. The fact of the matter is, this is not the Jack Welch era where.
And you've said, hey, Jeff Immelt, watch out.
Listen, I'm just really surprised that he still has a job.
I want to just turn to Ashley really quick, Ashley, because after the numbers came out here, was there any movement in the market overseas?
Not a whole lot. We certainly have been turning it around a little bit, but I think the reaction has been somewhat neutral. I think as far as the results go, personally, I think this is the fourth straight quarter the profit is down. I'm surprised they're maintaining the dividend. But you know what, if you take out GE Capital, which certainly has been a drain on their profits, it's not a bad performance considering the environment. You have to remember that.
Yeah, no, I guess so. What do you think of that, Charles? We're operating in a tough environment, and the rest of the company is doing all right, as Ashley points out. And
well, consumer and industrials were down. The energy infrastructure was up 11%. That seems like to be the big thing that you can say, okay, not only did they perform, but you would imagine that they had some incredible opportunities ahead of them. But the fact of the matter is that GE Capital is such an integral part of the company. Yeah. It's hard to strip it out. You know, we can rationalize it, but the fact that it's an anchor right now, at one point, it was the crown jewel of the company.
Let's talk about the stock just real quick again, because I was just thinking of a point that you made. So the logic seems to be, if you're going to buy for a trade, right, is to say, all right, I can get a better deal here in the short term than Warren Buffett did, right? But then you got to say, well, what's going to happen in the longer term, and will the AAA rating go away, and that type of stuff. So is it just a trading vehicle? It's funny to mention GE in that vein, because you probably never said that before.
I don't think people look enough as in total return. They focus a lot on the dividend, and you can have a stock paying a 10% dividend and lose 20% of its value,
Right.
and your net return is -10, but people say, look at what a wonderful dividend it has.
Right.
So at the end of the day, I'd rather see a 3 or 4% more traditional dividend and get some appreciation back into the stock.
You know, Charles and I have to promote ourselves real quick. Can you just give us a second here?
Doug and I are going to, we're going to just wait, yeah.
This weekend, Money for Breakfast weekend, we got a good show. I don't know if you know about this. Tomorrow morning and on Sunday as well.
Excited about it. Yeah.
We're going to talk about Obama, the new President Obama, of course. Jim McTague from Barron's will join us to talk about that. The great Liz McDonald will be on. And you know who else is joining us to talk about some personal finance advice? Doug Flynn. None other than Doug Flynn.
No kidding. What a
Boy, now
coincidence.
I'm really excited. You know, we can hang out. Watch. By the way, and also we're going to, of course, have a look back at the week in Washington with, I got a guess for you. Guess who's going to talk to us about politics?
Tell me.
Jim McTague.
Yeah, from Barron's. Yeah, that'll be
Barron's,
great.
yeah.
He's good. He's good. The only person sitting here that won't be on the show?
Jenna Lee.
That's
Jenna, you're going to miss
really
a good
messed
one.
up.
It is. All right,
Thanks,
that'll do it for
guys.
us.
No love at all. Nothing.
Fox Business Morning is done. So
Aw.
join us for Money for Breakfast weekend. Oh, Ashley's not going to be on either. That's right.
No, I'll be doing this.
All right, Money for Breakfast with Alexis Glick up next.